Wow, welcome, ladies and gentlemen. Robert Roy, your host. Hope you're having a fantastic day. Welcome to Options Explained. It's another great Thursday, another great trading day. Lots of opportunities out there today. Let's go ahead and make sure you all can hear me. If you would please go ahead in your chat box and type in the number 1 to let me know that you can, so I'm not talking to myself for the next hour or so. That would be fantastic. And we got a little bit of delay in there. All right, there we go. I see him coming in. I appreciate it. Thank you so very, very much. All right. Probably would help if I turned on comments. Okay. Morning, Voodoo. How are you, sir? All right. Looks like we got a good-sized group here today. I'm excited for the market. Let's go take a quick look at what's happening first with the futures. All right, I just did a video for this that we threw out on some of our social platforms this morning. But if we look, let me just go ahead. I'm going to start it up as if I'm going to record my screen, which I am not. But then this way I can get a drawing tool. So just bear with the 3, 2, 1 countdown. I'll pause it, and there's my drawing tool. All right, so we've got this sideways move that came right out of the box all night long. This is on the ES. We had a quick little pop for the European market into their open, and a strong pullback and a good run right until about 7 a.m. this morning. And then we've been down ever since. Multiple opportunities on the S&P, on the ES, as far as that pullback off of that 8 moving average. So slightly different pattern is NASDAQ, right? We had that nice move, the move sideways and a nice move up and the pullback, but not as bad. And we've actually maintained some bullish P&L on it so far. We're up 12 points on the NQ, which is NASDAQ. And we've come back to this 14,834 half level multiple times, right as we started out, down here at 1 o'clock in the morning, at 2 o'clock in the morning, and then right now we're bouncing out of it. So the question is, are we going to get back above our moving averages or not? We may see some positive come out of NASDAQ, at least right out of the gate. We'll see what happens as the market gets going. But futures are liking it to the upside right now. You know, we still got 3 minutes until 2.5 minutes till the futures markets close, or the regular markets open. Futures are not closed. I've got Bitcoin has taken off nicely. Still want it down about 28,000 to get some more. Gold has had a nice run up and a pullback today. Crude oil back up above $70 a barrel. And that gas has had a wicked ride as well, mostly to the upside from overnight session. So with that, let's go take a look. We've got stocks ready to rock and roll, all loaded here of what we're looking for today. We've got a tremendous amount of opportunities out there. We'll see what the market brings. It really is going to come down to, how do we open and how does the market continue through the day? We've had some great progress on the S&P. If we look here, great continuation, into Wednesday, Thursday, we're back in bullish bias, bullish territory. I love it. We'll see where it settles out as it opens up today, right? And can we maintain above that 8 moving average? That's really going to be our key on our daily. So the 43.3462 level, we're going to snap a line for today's price, and that's what we're looking at for that. So a lot of stocks to look at. I know many of you have still been trading the AMCs and the GameStops of the world. I've said it for the last 2 weeks. I've kind of pulled back. I'm going to go through my game plan with you today on what we're looking at for both AMC and GameStop. What does it take for me to say, and put in a trade? And we might find one that works and sets up today. We'll see. All right. We're not open yet. I'll hear the ding, ding, ding from TradeStation if we were. So let's pull this back. And let's go over here for a sec. There's the ding, ding, ding. As if I didn't know the market was open, right? So we got a nice quick little bounce on the S&P. All right, futures on SPX are showing that we're now up 3.5. There's the continuation, so there's the move up. All right, we're going to give it 5 minutes, let things settle out. I know many of you jump right in at your trade at the first couple minutes, and you can do that, and that's okay. It's a little aggressive. We're a little bit off today with the move up, the big pull back down. We're back up again, so I'm a little concerned if we're going to get some chop. So I just want to give it a few minutes to see what's going on, but I do want to go check some candidates out and see where we're at. So my tab 722 for today is what we're looking at. So AMC and GameStop both down on the day, right? Not surprising. RUT is down a little bit. Not a big deal. S&P is up about 3.5 right now. NEO, I know many of you are trading that. There's an opportunity for covered calls and naked puts. We'll check that one out in a few minutes. Diagonal spreads, all of these that I've got with the exception of eBay are moving nicely today. Nicely just means up. As long as they're not making a big move to the downside, I'm not going to be able to trade those if they are for that type of setup. And then we've got a couple of day trades in here as potentials that we can look at as well, both bullish and bearish. Right, so let's go back and look at S&P and see how it settles out. Let me max out this chart for you. Right, so if we look, and I'm a big fan of writing stuff down, right? So if we look, we've got a 43.60.22 level, right? 43.60.22. If I come back here, 43.60.08, that was a moving average yesterday. So let's just change this to 22. 43.60.22, right? That is our major fib level that we're dealing with, contending with right now, right? On the S&P, right? There it is, 43.60.22, okay? So as we look, today we gapped up above that level, right? And now we want to see, are we going to get any retest of that 43.60-ish level? That's really going to be the key for me. Right? Are we going to get an opportunity where we retest that? If we do, it gives us a great opportunity for SPY. Right? We want to look at the same thing on SPY and see where that resistance level is, the exact resistance level. I'm really not a fan of guessing at it. And yes, I use two different charting programs, TradeStation, and this one is called Omega Charts. Let's try that again. All right, there we go. So we're there. 434.92 is our resistance level, right? Which is what I've got drawn right in here. So we're pushing into that resistance now. So what do I want to see? The opportunity I would look for an intraday setup could come in 10 minutes, could come in 2 hours. As long as it comes before 11:30 in the morning or after 1:30 in the afternoon, I'm okay. I'm looking for a pullback near the 8 moving average and a close near the 8 moving average, the pink line, and a bounce. If I can get the bounce off of that 8 moving average, then and only then, for me, will I consider this a potential entry. If you are a continuation trader and you're taking the breakouts or the continued move, you can do that. And you probably would get more trades off than I will. I just have a better chance of being right if I wait for the pullback. I also have a better chance of missing the trade if I wait for the pullback. You just have to determine based on your risk profile what works best for you. For me, for Rob, what works best is waiting for that pullback and the bounce. Does that mean it takes a little longer? Yep, it sure does. Am I okay if I miss a bunch of trades? Yep. It's not like they're not going to come back again. You'll get plenty of trades to trade. For many of you, you'll run out of money before you can run out of trades. There's plenty of things out there. So we've got just under a minute left in this candle. We're getting that pullback now. So let's see if we retest the lows of the morning, which we are. All right, here, kitty, half minute left in the first candle. All right, so we're getting a good strong push down. Get me down to that 430, 430-ish level, 434 quarter, whatever it comes down to be, and close near it. It's not going to close there on this candle, I don't believe. But close near that and take a bounce. That would be one way. If you're more aggressive entry would be touch it and bounce, and there's your entry. Either way works if it fits your risk profile. So it looks like we'll settle out a little bit above where where our lows were today on the first candle. Now, okay, there we go. Right, big push. Okay, so I want to look at a couple of different candidates at this point. Right, S&P is running nicely into where I want it to go. From our day trades, potential day trades out there, let's see if anything is setting up. We're still in bullish bias. We're still in bullish territory on the S&P, right? And then this is SPY, right? We're still in bullish territory, so I'm still very happy with it. We're not at all-time highs, but we don't need to be. We're close enough as far as I'm concerned there. All right, so let's, there we go. Look at the 1 minute. That's the chart on the far left top. trying to max it out. But I have got a killer trading system as far as what's inside: RAM, video cards, top of the line, the most memory you can jack into this thing, just tons and tons and tons of memory. And every time you get major moves like this, TradeStation just kind of tilts. It doesn't work right anymore until some of the volatility slows down a little bit. So again, a little bit of a bounce off that level. If you're interested in TradeStation, if you're interested in SPY and you're saying, all right, Rob, we're bouncing, do I take it here? If you are taking it, I'm not. If you're taking it, let's go look at the option, right? So here we've got SPY, and I want to find an option that expires as short of time as possible. On SPY, I actually did a YouTube video yesterday on SPY. There are 3 expirations per week, right? The next expiration is July 23rd, which is tomorrow. Today's 22nd, Thursday. The next one is tomorrow, right? So this option expires tomorrow is what we want. I want to find a delta of 65 to 85. So somewhere between my 432 half strike all the way up to my 430. One of those strikes is what I'm looking at. And I need the open interest to be greater than 100, which on SPY is never an issue. Did they all hit 10,000? Not quite. This one is only 7,800 on this one. 11,000, 18,000. We've got a lot of open interest in there. I like to, on my options, if it was expiration day, I'm looking to spend about $3. If it was today, I'm looking to spend up to $3.50 to $4. So I've got the 431, which is 359 by 364, right? 360 by 65. A little bit bigger on the bid-ask spread right now on this one. They've got a lot of volume today, over 1,000 contracts and 1,100 contracts on the 430s. And down here, right at the money, the 434s, we've got 4,700 contracts traded on it today with a 15,000 OI, 15,000 open interest. Okay. Yeah, no, Will, it's not your computer, man, at all. It is TradeStation without a doubt. And what makes it worse is I run anything else. I'm running Camtasia, which is my recording software, so I can draw. I'm in StreamYard. I've got a couple of web pages open. I probably have the equivalent of 80 or 90 charts open on TradeStation, and is horrible. But I like the platform. It's just, you got to deal with the junk too. I like Sprint as a cell phone provider, right? Or AT&T, but I don't like this. All right, so that would be the option if you're looking to trade it. Somewhere between 432 half and 430 would be the option that you would trade. Now let's go look at the chart again. That was all explaining how, and this is why I don't take it on the bounce. I wait for the close, right? We have failed and fallen below. That doesn't mean we're staying there. This could be nothing more than a shakeout, just trying to shake the tree to see what falls, right? And this is traders that took the bounce, right? Now the shakeout comes, right? I'm out, and we get rid of all the looky-loos, and then we get the real bounce from there. If we can get a close above the 8, there's the opportunity. And again, that's our resistance level, is the upper line that we've got drawn right there, right? So we got to see what happens on SPY, but we're not going to wait on it. We're going to continue to look through here today. So CMG has been a major stock. I'm a huge fan of CMG. Traded all the time. Right? What a move yesterday on earnings, right? And today has just been crazy day. Yesterday was crazy day. Today, I'm expecting that it was an overreaction to the earnings. We will get some pullback over the next couple of days. What I really want to see is, can I step out there on CMG and find a spread somewhere down below that 1690 level, a bullish spread down below 1690. So let's go here. Let's change this over to CMG. All right, I'll full screen the 5-minute chart so you get a better view of it. All right, so there's I'm going to make a little more data on there. All right, so CMG. If I want to buy an option on CMG, they're expensive, man, and they always are, right? So if we look for my rules, I'd be looking at this option right here, the 1740. It's 1880 by 2440. Huge spread. I like it. I like the company. Doesn't matter. I like trading these guys. And if you trade them, you've got to contend with these bigger spreads. they're also dealing with the earnings announcement that just came out, which jacks them up a little bit on top of that. But if we switch this over and so, you know what, let's look at a vertical spread and see if we can get anything from a vertical spread. What does a vertical spread mean? Well, instead of just going out and selling what's called a naked put, right? You sell a put on something that you don't own. You now take on an obligation. So if I sold a put on XYZ stock and I sold a $100 put, that means, and somebody pays me $1 just to make up a number. They pay me $1. It means I get to keep that dollar as long as the stock stays above 100. If it gets below 100, somebody's going to make me buy the stock for 100. So if it drops to 92, I've got to buy it at 100. If it drops to 80, I've got to buy it at 100. Ooh, if it drops to 0, I got to buy it at, you got it, 100. So what do? Instead of going out and saying, all right, let's take all that risk on, if we sell that 100 and we go and find the next strike price below and we buy it, whatever that distance between those two strike prices are, that's my risk in the trade. It's called a credit spread. It's a vertical is the type of spread, but it's a credit spread. If it is a bullish trade, if you think the stock's going up, it's called a bull put spread. Bullish trade using puts, spreading out your risk with options. If you think it's going down, bear call spread. Bearish trade using calls, spreading out your risk with options. So we're going to look at a bull put. I don't think we're going down. We may have some pullback, but I don't think this is a bearish trade at this point. So I'm looking for, and what did I write down? 1690 would be my ideal if I could get anything for it. Now that would be 1690 and 1680 is what I'd be looking for. So right now it shows me that my mid price, I could get 40 cents for this trade, right? If I go with the mid price. So what does that mean? That means that if CMG can stay above this 1690 Fibonacci level, the next fib line that I've got drawn in there, if I can stay above this line right here, this horizontal line, by tomorrow's close, I get to keep all of the premium. If I'm wrong, I'm putting $10 at risk on this trade because that is the difference of these two spreads. And as we have been talking about it, what's going on? We've actually seen it drop. It's only now at 13 cents for its mid price, right? But what I would do on this is I'm going to sell this spread, right? And I will change it to one contract just to make the numbers, the math easier, right? And we're going to sell one spread. Now it shows the midpoint would be a 20-cent credit, and that's the mid right here, okay? I don't want 20 cents. I'm not going to do it for that. I saw we were at 40 cents before, so I would want it at 40 cents. If they pay me 40 cents, great. If they don't, this trade is for the day. It'll expire come the end of the day. I did this yesterday on Netflix after their earnings announcement, and my trade sat for quite a while. Market maker didn't take it. All of a sudden, at the end of the day, if you own trades, if you have TradeStation, you know, and you've got your volume on, I hear order filled. Right? What was order filled? What order did I have in? It was a Netflix credit spread that I did. It was a bullish credit spread, which means I'm using puts. Right? So this could sit all day long, and the market maker sits there and goes, you know, all right, fine, I'll take it. Right? I'll take that trade on. And what happens as far as risk in this trade? That's the most important thing to me is the risk. Right? If I flip this around from vertical to single, we're looking at these two strike prices right here. My delta is 7 and 9. 9 is the one that I'm selling. See, it's in red, that line. Look down here. That's the one I'm selling. That is the 1690 put. My delta is a 10. What does that mean? There is a 10% chance that this trade goes against me come tomorrow afternoon, 4 p.m. That's it. 9 out of 10 times, this trade will move in my favor. Do you like it? I love it. Absolutely love it. All right? Well, AJ, what's expensive about it? I mean, is there cost if it goes against you? Absolutely, but we're never going to let it go against us by the whole $10. As long as it stays above 1690, we're good, right? And right now we're at 1750. So we've got 1752. So we have $62 protection for tomorrow, you know, by tomorrow's close. And if the trade doesn't fit your risk profile, then AJ, you're 100% right. If you look at this and say, nope, too expensive, I cannot sleep at night getting in a trade like this. Awesome. Then you wouldn't do that trade, and that's okay. There's nothing wrong with that. This is an example. We're up to 85 cents of credit right now on this trade. I'm going to flip this back to vertical because I like to look at it this way. We're up to 88 cents of credit right now, right? And that's midpoint. Doesn't mean they're going to give it to me, right? But I will be happy, you know, it's moved up, so I'll be happy if I can get 80 cents. Place the order. Read it out loud. And I always want to see prices here. I want to see what it's doing, and I want to be able to see down below. So I move this order box, the confirmation box, over a little bit, right? We're looking at the July 23, 1680, 1690 short put vertical spread, 80 cent credit limit, right? Buy to open 1 CMG 23rd of July, 1680 put, and sell to open 1 1690 put for the day with an 80 cents credit on that trade, right? I'm going to click yes. And that order is now sent. Didn't fill. You would have heard it if it did. It did not fill. That order is out there, right? When you look at the risk on this, you say, well, Rob, look at the risk you're taking on versus the cost of the trade. In other words, you're taking in 80 cents, but you're risking $920. Number one, you're not risking the full 920. You're not letting it go against you to that level. Could it? Absolutely. You've got to understand that risk. But if you know going into this trade, there's only 10% chance that this trade goes against you. That means if you do 10 of them, 1 out of 10 will go against you. And you're going to manage that trade that if it does go down and it gets down to the cost of your option, right? So if you took in 80 cents and you've got to buy it back at $1.60, so be it. You pay the $1.60 to buy it back and you call it a day, right? And then you go on to the next one. This spread setup, I call it a gap spread. It's my trade setup. I created this one, all right? At least with my rules. No one else had been trading these. I've never heard anybody talk about these before. This trade has a very high probability of being right because of where the delta is. Because we gapped up and ran on that good news, with 2 days left, there's an extremely low probability. I think 10% is way too high as a number for this to go against us, right? AJ said, I took your bill trade. So you making some money on that now, AJ? You should be. We are. We're doing well on it. All right. So Duncan Dave, thoughts on the Jan 17 half 2023 CCL Delta 77? It's a leap. Okay. So Duncan Dave, if I go, let me flip this over back to single. If I am going to buy leap options, right? I don't normally buy that high of a delta personally because I've got the time for growth. You see, why do we buy what we do? The options we do. Let's change this over. See how red looks. Okay. If we look at this bell curve, my right side always is a nicer curve than my left side is, where I start. If we look at the bell curve, that 65 to 85 delta falls somewhere in here, right? And what happens is this gives us our greatest opportunity at growth in there for over a shorter period of time. When I'm going further out, if I am more than 6 months out, Duncan Dave, I am looking at a delta of about 60. 50 is too expensive. Stay away from the 50 always for me. You're paying too much for time. It's a coin flip is all you're doing on a 50 delta. But I've got a lot of time for appreciation. It's actually going to be here as my 60. I've got a lot of time for appreciation. So I'll go with more of that 60 delta and save a little bit on cost on that trade. So if we're looking at CCL, and we're way out in 23, Jan 23, and you said the 17 halves. Okay. I'm assuming, okay, you wrote call. Okay, good. I was assuming it was calls. 17 halves, 790 by 835. It's okay. Plenty of open interest. That's fine. I don't really care about volume. That doesn't matter to me unless I'm day trading and it's happening right now. Then I want to see some volume as support. But if I come down here, let's see, do I have gamma on here? I do. All right. So if I come down here to my 20s instead, I've got a 69 delta. If I come down to the 22 halves, I've got a 22 and a half delta. a 63 delta. I can lay out $6, $5.75. I can lay out versus $8. So I can put a lot less into the trade. And what are we talking about? We're talking about that if the stock goes up a whole dollar, my option will go up between those two 13 cents more, right? Every dollar the stock moves, this option will go up 76 cents. Every dollar the stock moves, the 22.5 will go up 63 cents. But what we're not accounting for is what's called gamma. Gamma, write this down. If you don't know it, write it down. Gamma equals rate of change of delta. Rate of change of delta. Gamma is the rate delta changes based on the movement in the stock price. So if I go with the 17.5, right, we have a gamma of 2. What that means is my delta is going to go up or down by 2 points. So from 76, it's going to go to 78 if the stock goes up, 74 if the stock goes down, $1. On the 22.5, it's 3 cents. So now if I'm thinking that the stock is going to move 5, 8, 10, let's say $10 just to pick a round number. $10 if I have a 2 delta versus a 3 delta, now we're talking about 10 delta points difference. You see how, and it will change at some point. Gamma is not constant forever. It will get closer to each other as the stock gets closer to price. But gamma helps us to understand if I spend a little bit less, I can get a greater appreciation. And that's because of where we fall on that bell curve. So I'm not opposed to the CCL at 17.5. I just think the 22.5 would give you a better opportunity because of cost. You know, I could do one contract at $813 of the 17 halves. I could do 2 contracts at $1140 of the 22 halves. Right? So I've got a little more cost in there, but less than half, less than 50% of it would be my overall cost in that position. So again, I'm not opposed to it. Not sure what you mean, Freedom. I thought AMC wasn't ever going back in the 30s. Well, if you're talking about anything I said last week, first thing I will say is I never say never to anything in life. I've learned that extremely well, right? So we are looking at AMC is down right now. I mean, you said in the 30s, so I don't know, but so it's at 39.65. Maybe that's what you mean. Maybe you meant dropping down below 40. Okay, so I've said for the last 2 weeks on this show that I'm not trading AMC right now because it's not giving me a setup. Because my risk with that, I talked about it with this rounding top happening right here. That was my fear. Said if you were going to do it, I would find something down below the 33s. And guess what? We stretched down below there today. This week. We stretched down below the 33s this week, twice, right? Within the once was last week, once was this week, right? So, and I said, I am not selling them until we get back above the moving averages. Moving averages are in the right order. That doesn't mean there aren't others that are doing it. In my mastermind group, I've got traders that I train that are trading AMC on a regular basis where they're shorting on this. Suzanne is one of our traders in there. She's doing this all the time. She's trading AMC. She's managing her position. It's not a set it and forget it. She's managing her position based on what she sees. But she's still shorting on AMC. For my risk profile, it says, I'll wait. I'm in position number 1 of the chair. Back here. Can't reach the keyboard, can't make the trade. Right? I'm watching and waiting. I'm not trading it. IWM is down equals AMC is down. There you go, Michael. All right, let's see. All right, let's go and take a look at a couple of positions, guys. Someone just said SPY is coming up. Well, I mean, there's a lot of volatility. Look at this last candle. Look at the wicks on that candle. You know what and how we settle. We have a tiny body in there, right? And these long wicks, both up and down, almost equal distant between the two of them, right? That was bulls and bears fighting hard, and nobody won, right? There's a lot of indecision happening here. The bias is still, from a moving average standpoint, intraday is still bullish. But we've got to get above and close above, for me, that 8 moving average. But did we do what I said? If we closed above, sorry about that. We closed above right here. We opened flat. Let's try it this way. We closed above right here. We opened flat the next candle, and we made our move up. So from that, if you could find a bounce off of that moving average, there was your opportunity. Where did we go? 2 candles in a row. Count them, 1, 2. We ran right up to resistance. How did I know? Robert, how did you come up with that number? It's right on my chart. It's called Fibonacci. It's a simple solution, simple answer, right? Fibonacci is the key, period. Yeah, we do have a tight range, AJ. And why? Look at where we are right now in relation to that 434.92. We're very close. To me, what do I want to see? Get me above there, retest and bounce, and there's a better opportunity. But if I can come back to this part of the moving average and bounce, would be great as well, right? It's all a matter of where your risk is on the trade. All right, so guys, let me run through 2 or 3 more of mine, and then we'll go ahead and take a look at some of the candidates that you guys want to see. All right, so boop, 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 boop. Where are we for S&P right now? We're down about 3.5. Not too bad. RUT is down about 22, which is really nice. If you haven't yet got on your iron condors, if you haven't put them on yet, you need to look at them. Right? I mean, look at this move. This is a sideways move, folks. We've been down at this level multiple times. We've been up here multiple times, right? You need to look at your RUT, at a RUT iron condor if you haven't done so. All right, so let's see what we've got available as far as months. All right, so in an ideal world, we're looking for 60 days. So you're looking for the SEP 17 is what we want to see, right? This is where we would do the iron condor, right? I've taught this a couple of shows ago, but that's, if you haven't put it on and you know what the iron condor is, guys, it's time. You got 56 days left. Let's see. Beautiful. All right. So what else do we got going on here today? As far as day trades, we've got a lot of opportunities intraday. CMG is up right now $12, right? So if we look at CMG, we put in that credit spread. Don't know if we got filled or not. All right. Look at the bounds. When someone tells me Fibonacci's don't work, it's just a bunch of lines on a chart. We opened up right there. We pulled back below. Here, kitty, kitty, just trying to shake out the looky-loos, and we got to bounce, right? Yeah, I appreciate that, guys. That tradewithrob.com that just got dropped into the show notes, guys, there in the chat box. That is, I forgot who said that they took that trade on Bill, B-I-L-L. That was one that came out yesterday. Tuesday. So it came out for yesterday's trading day on BILL. It's a free setup, guys. Actually, I'll share with you the results in just a little bit. Voodoo said, I got the August iron condor, went to set up on September. Excellent. There you go. All right. So IGC. I guess for me, Joseph, I don't trade anything like this. I don't trade this lower price stock. To me, and I don't know what's happened with it. I'm sure there's something low float on it, this big move. I don't know if it's a Reddit stock, but I don't trade these. As an options guy, let's see if there's even options available on it. Don't know. Let's try something else. And then we'll do one more time. Let's put IGC in. All right. So there are options available on IGC. It's a $3.39 stock. If I had to buy the option on it, I would spend for this month, for August 21st, August 20th, I would spend $1.13 on this option. So, but I don't know why it's gapped up like that. For me, I tend to stay away from these types of setups. I would rather spend $10 on an option than buy $10 of a stock. Because on a $10 stock, you're dealing with some of the lower float, you're dealing with some of the more volatility that's out there. And that is not a bad thing per se, but I'm looking for consistency. I want to be the baseball player that gets up and bats 350. I want to be the guy that hits 350, 340, 360 consistently, right? I want to get on base a lot. If I get a couple of home runs in there, that's awesome, right? But I am not looking at trying to catch these types of moves. They don't work for me. So sorry about that one there, Joseph. Just not, you're quite welcome. Just not my cup of tea. Let's go look at SPCE. And guys, as it says on the bottom of the screen, right as I said in the very beginning, you've got to trade to what fits your risk profile, your risk tolerance. When I talk about trading the iron condor and a credit spread, they fit my risk profile. Why? Because although I take a smaller amount of premium in, I reduce my risk. I reduce my risk in that trade by being a seller versus a buyer. I increase my odds of being right in a trade as a seller. As a buyer, buy a stock, buy an option, directional, up or down, I've got to be right. It has to move up. If I buy a stock and it goes sideways, do I lose money? Yes. Yes. It's opportunity cost. You've got that money invested that you could have it in something else, right? It's cost of money. When you look at the pricing of options, the cost of money is calculated inside of that. It's called RHO, R-H-O. It's the cost of borrowing money. So I look at it as what can give me a consistent rate of return. Traders out there that are trying to get 200, 300, 500% in a week, and that's great. And we have that. It happens. But why don't we look at consistency of trying to make money over and over again instead of let's try to hit a home run on a position. So on SPICE, SPCE, right, which is Virgin Galactic, I'm looking at a bearish position back off the 35 down to 30 is what I see. Keep in mind that the earnings are coming up. This is my earnings indicator. It needs to be, that E needs to be on the right side of this. You would have to go and check to confirm earnings, because if it's not confirmed, you just don't know. I don't show that in here that it's confirmed or not. So you'd want to go and check earnings, which you could do on your Benzinga Pro platform. But for me, I'd need to pull up to the 35 and a fail. That would be my entry into the trade. I'd be looking at a put option on it. Let's see, CBS. All right, also an earnings candidate. You see the mess that's going on here the last 2.5 weeks or so? Let me bring that in. Right in here, we're channeling between that 82.5 and that 79.5. So I don't have a lot of room in there. I like this. I call it a Fibonacci channel. But the way I would trade this is if I took a put option right now, target 1 would be just above that 81. Target 2 would be just above that 79.5. Okay? That's what we're looking at as far as our targets go for this. And I don't have a lot of room. 82.5 down to 81. It's just not there. You could try to bypass that first target, but I just think you set yourself up for too much risk with bypassing that one there. Crypto, thank you. IGC is running on patent news. Appreciate it. Notorious pump and dump. There you go. Jobless claims up. Expected a flat market. Understand. All right, let's see. All right, let's keep going. We'll look at AMD, Chuck. Sure. Big picture, really big picture. All right. We've got a nice move up. We're bouncing up. It's going to be a little harder to see, but let me take this down. Okay. This is a zero line right here, right? That's the fib line. This is where I've got my Fibonacci drawn from. This bottom, which is the 1, up to this 0. When we get, let me do it like this. I'm going to back this up to the beginning of the fib of where it starts. Okay. When we get a breakout, right here was our very first breakout. We broke out on the wick. So someone would say, well, Rob, I wouldn't take that breakout, but I would take this one. Okay, why? How did you know that one was going to fail and that one doesn't? If you're a breakout trader, you're a breakout trader. You're taking the breakout, right? It came back down inside and nothing else from it. So we're looking for above that zero line. Once again, another head fake. It broke above and it failed, right? So now what? Here we broke above and we closed right about that zero line. So if this was me, yesterday, well, let's see. Here, I'm sitting at this point in my chair. This is where I am with where the candle is on the right side of the chart. We get to this day, the next day, I go from here to sitting straight up. Now I'm very focused on it. We're there. Are we going to break out of that upper line, that 87.75, whatever it is? We break out and we close just slightly below that level. I am now lean forward. This is me ready to place a trade if I can get a bounce off of that. So we close there. Give me a bounce tomorrow. There's my potential entry. And there's the bounce. What's different on this candle here than this one here? On this one on the right, I got a retest and a bounce. This one was just a straight breakout. This is what zero line breakout is built upon. The trade setup that I use in the tradewithrob.com/go that I explained to you before, this setup right here is all predicated on that move right there. So we continue to go, right? And let's see what happens. We run. By the way, my first target is here. My second target is here. You're talking about an $88 stock that ran up to 92 and then up to about 96. So from 88 to 96, great execution on the trade. But we don't have another setup on this until we're back down to the level we're at again, that zero line. So what happened? We retested it here. We got close. We got down 88.21 and we're at 87.20. We're about $1 away, right? We stretched down to it again, right? Boom. There's your break. Here, now I like where this sits better than I liked it here because we closed near it. Does that mean it's going up? I have no idea if this is going up or not. You guys called AMD out, not me. Right? We got a break. So might you have taken the entry? It all depends on how quick that bounced. Right? There's the pop. There's the retest. Boom. See, even if you got stopped out on this candle right here, you got your bounce and your retest and you're back in. And there you are at your target on the next candle. All right, we broke below. All right, see the head fake? We gap up and we fail on this candle. Now, I'm not telling you to not be a breakout trader. You trade the way that fits your risk profile. Here's another breakout, right? I like the breakout and I love the move that it made. But how did I know this wasn't a failure like this wick right here was, or this doji type candle here? How do I know this wasn't going to be the same thing? Especially if we opened all the way down here and now we're making that run. We push up, we're down below, we close just above. If we get the retest, boom. Guys, here was the retest of our support. Here's target 1 hit. Right? And we're in the same scenario right now with where it was. It closed just below. It pushed up yesterday, retested. You can see it broke below that 87.29 level, and then bounced. There's the entry into the trade on this candle with your first target right about 91. So right about here is where your first exit is going to be. So Chewy said, would you trade buying a call in the breakout or selling a put? On which stock, Chewy? It really is going to come down to the position. Would I sell a naked put on Amazon? Rarely. Right? Rarely, because of my risk in that trade. How far down can Amazon go? A lot. So I would probably buy a call. But really, it's going to be predicated on the individual stock. If I'm at lower price positions, under 40 bucks all the time, if I can, I'll collect premium wherever I can pick it up. But when I trade CMG, when I trade Amazon, when I trade Booking, when I trade Facebook, when I trade Biogen, when I trade Baba, Baidu, all of those are buying long options, directional trades. Netflix was a consideration of a credit spread. Why? Because they came out with this crazy move yesterday. And if you took the credit spread yesterday near the open, right, and it was a bear call spread, and that bear call spread is up here somewhere, I've got very little risk in that trade. All right. You are welcome, Chuck. Chew, you're good. It would really depend on the symbol. So again, Chew, it really depends on the position I'm looking at. So here, let's do this. Watch. Guys, these are the Trade with Rob candidates. Every one of them, everything that we've done. This is all on video. You can go back to the series and watch every single one of these trade setups and see exactly what I called out for them. I tell you how I want you to enter. I give you the first and second targets. I give you the stop. I expect you're doing this all with non-funded trades. It's all paper trades for you, or should be. We've got, overall, there were 17 items I called out. There's 19 lines in here, but the first two are header lines. Those weren't trades. And this is 2 months, almost to the day. Right? I've only got one open trade. It's Bill, B-I-L-L, which is line number 19. And I had 3 trades, LMND, Plan, and AWK that we never took. So of the 17 trades, the 17 opportunities, we had 3 of them that we never bothered to take. All right? So if that's the case, then what happened in there? What transpired? Well, if you look, we had 2 trades went against us. Alibaba was one, and Clorox was another. We just got stopped out of Clorox, right? That was another. And it says stopped out, stopped out. You can see exactly what was going on. All the notes are right here. The only one that's open right now from the setup, and again, we take all these as paper trades. The only one that's open right now is BILL, right? We're up 200 bucks. I'm sorry, we're up $525 on our first target. We're waiting for our second exit. If we look at BILL, beautiful, beautiful. Keep going, baby. So here's your stop. So if I were wrong and we took the trade yesterday, we moved up, and watch, I'll take it even a step further. This is yesterday, right? The 20th. Nope, too far back. There we go. All right, so here's yesterday, 21st, okay? There's the bounce off that 190, 197 level. Why is that level important? I will share it with you. Okay? Look at what happened. And I lost a day on here of what's on my left side of my chart when today started. But look what happened right here. Look at the congestion that we put in. As we were stretching down, I actually had this up slightly higher, right about in here at those tops. Look at what happened as we stretched down. We closed just below that line. We moved up, we bounced, and there's the entry into the trade. Okay. So nice little gap up this morning, which you could see on here. But our first target was hit yesterday. And that first target was right at 200. It's a 100-point level. So we were triggered on that yesterday. The next one is up here at 211. Right. And then you move your stop up probably to about 195-ish. So if it does come against you, you'll give some back, but you're not going to have anything go against you on that second half of the trade. If you only took one contract, you're out at the $200 level and you're done. All right. What's balancing, Voodoo? Then it said, first time listening, appreciate the info, good stuff. I appreciate it. Oh, I didn't see your first comment, Voodoo. I can't get the 50-cent mark on the September 24, 50, 40 on the call side available, but mark is 75. You just take on that bigger risk. If you go with that 75 delta, Voodoo, that you've got to check the individual deltas. If you can maintain that under 10, you're okay. 6 or 8 is really what I'm looking for in an ideal world, but under 10, you're okay. All right. And guys, this setup on these 17 trades that we called out, and 16 of them, or whatever it was, were taken, right? 3 were not taken, right? So of those, we're up 88, 87, 50, $8,800, $8,900 in 2 months on these setups, assuming you took 2 contracts. That's how this is laid out. Only 2. Oh, Rob, it's not enough work. 2 months, I'm up $8,800. Well, do more contracts. The whole idea behind this is to do it with as small as possible to show you what is possible with these. And then you make the decision, is this going to work for me or not? Right? And if it does, then you add more contracts to it. Once you get good at this, you start adding those contracts in. Guys, if you go to tradewithrob.com/go, just give me your name and tell me where you want me to send it, your email or your text, and you'll get a notification that the video is out. They come out the day before. They're out there the day before. We post them on our website, and you'll be notified that it is there. And you'll be able to go ahead and check that out and see exactly what's going on. Where are we at? All right, beautiful. So tradewithrob.com/go. Let me move this out of the way. So would I trade AT&T? Not normally. It's too big of a blue chip for me. When it comes to options, when you get these big blue chips, I'm going to go big picture on it. All right, so you know what? Let's do this. Let's go ahead and draw the fibs on here. So I'm going to draw the Fibonacci from this swing high right here to this swing low. I do like on Omega charts that actually snaps into position. So I'm not like TradeStation. I got to try to guess if I'm on the bottom or tops of the wicks. All right. So this is my fibs. Nope, not what I wanted. Just want to scrunch it down a little bit. Other way. Okay. So I've got a support level at 27.25 right now. If we look at options on it, you'll see, if I bought this, even if it was in a bullish position, if I bought options, if I can get options on this, I love TradeStation. Okay. If I'm looking to buy this, I'm going to buy at least 30 days. So I'm going to go out here to 36 days. I've got an option at the 70 delta, which is the 27 call, assuming I was bullish. The 27 call, which I'd spend $1.16 on. Great gamma, 21-cent gamma, huge. But what does AT&T move? AT&T moves 42 cents a day. So a little bit tough to try to take that one, Dennis, for me. Neuro, yeah, I got them on my list. They were rock and rolling, that's for sure, right? But same thing, they came from a $2 stock, and there's the Reddit play, right? There's the GameStop, boom, boom. Great move up, pull back to the downside, hard, right? And there are no options available, which doesn't help me any. I'm not, again, this is too much risk for me in this type of trade on a neuro. It's the home run trade. It's the, wow, I was able to buy a Lexus or get my house taken away from me, repossessed because I lost everything I own. One or the other. You know, covered calls on AT&T say, hey, we could look at them. I just don't see the premium there, but let's look. It's probably better to analyze it than to just guess at it. So let's see. So if we look at AT&T, we're going to buy the stock at $27.85, and we are going to look to sell. Well, we won't sell this week's because there's just not enough premium in there. We're looking for about a 40 delta. Wow. I mean, I got a 43 delta, and it's 28 strike, which is only 14 cents above where it is now. Little close for me. But could you do it? Yeah, I look for, and here's the way to calculate it, to look at it. I look at a covered call for me. Now I'm 56 years old, right? On covered, and there's a reason I told you that. For me, on covered calls, I want 3 to 5%, so 3 to 5% per month is what I'm looking for on a covered call. The reason I told you my age is that's at my age. As I get to about 60, I will probably drop that to 2 to 4%. Why? Because I do covered calls primarily in my retirement accounts. If that's what I'm doing, if I'm doing them in a retirement account, what does that say? That tells me that I'm not willing to take as much risk, and that's why we do a retirement account. Is it's not a risky trade per se on a covered call. There's still risk, but not the same risk as a naked put or a credit spread, a condor, and so forth, right? Diagonals and so forth. There's a little bit less risk on the covered call because I own the equity, which does not expire. So if I had to, I could hold it for a very long time, right? That's the bottom line behind it. If I wanted it or needed to, I can hold it for a long bit. I'm looking for that 3 to 5%. If you can get 3% from this trade, then by all means, go for it. And I do weeklies. I don't do the monthlies. I'm not a monthly options trader. I do these weeklies. So if I'm looking at 3% for the month, that means I need to get at least 0.75% for the week, right? One of the things you guys can do is we've got a calculator on the website on WealthbuildersHQ.com. If you go into trading resources and you go on to calculators, there's a covered call calculator. You can enter all the details in from your trade, and it will tell you what your rates of return are and all that stuff. You don't need to be registered. Just go to the website, WealthbuildersHQ.com, go to trading resources, click on calculators. Naked puts, covered calls are there. We're building more out. This is just the ones we started off with. And you'll be able to see exactly whether this trade works out for you or not without going crazy with the numbers. Because we even talk about what happens if you are exercised on the trade. In 1 week and 1 month, how much would you make? This is based on if I'm not exercised, if I am exercised for a week, or if it takes a month for me to get exercised, what would my P&L be? Looking to buy Nvidia to use for selling covered calls. So Siggy, it's hard to say on Nvidia right now because of cost. I mean, the split. But covered calls for me are under $40. Instead of the covered call, Siggy, look at the diagonal. And let me do the diagonal or share with you a diagonal and see what happens there. So I am looking just like a covered call to sell that 40-ish delta for the short month or short week. So I'm going to do that here. I'm going to grab this. I'm going to click sell on that 37 delta right there. I'm going to click sell. It's going to load that up. Then I'm going to go down at least 120 days out in time, November. This is my last week to trade November options. I'll be pushed into December next week And I'm looking for a 65 to 85 on my delta. So, but closer to 65. So the 180 I can buy for 26.25, right? So if I hold down the control key on TradeStation and click the buy, it loads both of them up in there. Let's bring it down to one. Is my trading dog barking over there? Let's bring it down to one of them anyway. The other one just got home. Let's bring it down to one contract, and it shows me that I can enter this trade for $24.77. Right? So I only need $2,400 to do this trade, and my risk in this trade is this. I am giving someone the right to take the stock away from me at $198. Rather, what strike did we do there? It's all because of the split. So we got weird strike prices there. 196.88 because they had to split down what was a whole number of strike. So someone can take it away at 196.88. If they do, I get to take it from somebody else at 180 and make them buy it at 196.88. Now there's a payoff period, and there are some rules behind this trade. But for me, covered calls under $40 stocks is what I'm looking for. Right? So Siggy, I hope that helps. Yeah, Born to be Free. I'm glad you like that tool. It is a great little tool. Guys, listen, do not forget, go over to tradewithrob.com/go. And if you really want to learn the trade setups that I do, this is one of them that you get 2 trades every single week. That seems to be our magic number. If I find more, I'll put more videos out, but usually 2 days a week is when we do it. All right? Fantastic. What do you guys think? How was today? Did you get some good stuff out of it? Let me know. Smash the like button. Aaron, you there?
Yes, sir. Yes, sir.
Hey, Spencer, how you doing?
Hey, good. How are you?
I am fantastic. We have not talked in a little bit.
It's been a couple weeks.
Yeah. How's things going?
Good. Just, trying to get my bearings here. Had a couple good setups I saw on the show today. So not bad. Yeah. Any final thoughts for us, Robert? Just in terms of, it doesn't have to be a specific setup, a specific trade, just in terms of your overall feeling about where we are right now. We had a, buy the dip kind of day on Tuesday, continued yesterday a little bit. Any just overall final thoughts?
So every day in the market, these pullbacks are what traders are looking for.
Yeah.
This was, on right here, 3 days ago, this was the loaded up day. After this crashed down and we got back above on the S&P 500, that 42.83 level, that was the entry, was right in there to go long. Traders are not allowing the pullback to be that 10% pullback. They're jumping right back in with every single small pullback. Go back and look. Right here, we get the pullback and we're right back in the game. We get the pullback here, we're right back. We get it here, we're right back, and all over again. You get a pullback like we did the other day. This was on, the date was the 19th, which was Friday. Monday, sorry, my bad. Monday, it's Thursday already. Wow.
Yeah.
You get that kind of pullback and you start to see a bounce coming. That's where traders are loading up, is right there. So that's what I'm looking for over and over again.
All right. Well, we'll catch you next week, guys. Drop a like in there for Robert Roy. We always appreciate his time.
Excellent.
And we'll see you next week, man.
You got it. Thank you, sir. Take care, everyone.
All righty. All right. So I'm just going to hang out with y'all. If AB wants to hop on, he's free to. We do a SPACs attack at 11. Yeah, we had ticker DMYI on the show today. Peter Chapman, he's the CEO of IonQ, which is the company merging with DMYI. I did get my DraftKings 48.58 is where I caught some. So keeping a close eye on it. As I said, I'll sell if it gets down to I'll probably give it a little wiggle room. So like I like yesterday's open, right? So what was that? It's like 45 something, right? 40 or 44.76, high 44s. That's probably where I'll sell if it gets down there. But yep, that's what the only trade I made so far today. What about you guys? Tell me what you're trading. Tell me what you're buying. Tell me what you're selling. We can hang out and talk about it. I'm going to turn on the squawk because squawk is fun, and we'll have Charlie squawk for us when he feels the need to squawk. Is it me, or does CCIV appear to not have the votes it needs for the merger? It's a good observation, Solar Up. Would love to get Chris Catchy's thoughts on this. I'm sure they will discuss it on SPAC's Tech today. They did have a barrage of PRs out in the last couple of days saying, vote, get out the vote, get out the vote, get out the vote. What would happen if the vote...
SAV.
Okay.
SAVA, Cassava Sciences, Sandy Alpha Victor Alpha. Shares are hitting new highs now, 122.94.
Well, what would happen to this thing if the merger didn't go through? I mean, do we think back down below 20? Like teens? Seems reasonable, right? Wait, Coupon Boy saying it was approved? Wait a minute. There's a press release on 9 minutes ago. They're going to adjourn and reconvene a special meeting on Friday to allow stockholders more time to vote. What? Yeah, I know they start looking for a new partner, but I mean what happens at the stock right now. Like they're the immediate reaction, right? They go back to square one. If PSTH is any guide, right? And I'm long PSTH from like 21 or something, or 24 or something. PSTH called off their deal, back to square one, right? They're basically at par. The CCIV, since they have to go back to square one from a deal perspective, the stock probably goes to the teens. You would presume, maybe even goes to 10, right? In theory, shouldn't it go to 10 or whatever, 10 and change? You can count for the warrants. Yeah, I mean, not a good situation. If it doesn't go through, if it does go through, then let's be honest, it's probably still a selling news event.
Business Insider says JP Morgan to give wealth management clients access to crypto funds.
Oh, not new news. I feel like I think that was out there already.
Julia Papa Michael.
I think that was out there. Let's go to my scanner, see what's moving here. Yeah, Sava is at the... Well, Sava was just making a big move. That's why Charlie squawked it, because he saw it making the move. Going back to my scanner tool. Get rid of this. Overall gainers. Sort from the open. Again, this is the scanner tool in Benzinga Pro. Don't know what this is. Okay, DPZ. I see you, Dominoes. Wow. Holy cow. No, that's what a buyback and a beat will get you. It's the same thing as Chipotle. You know what? It's the same thing as Chipotle. I tried to say that yesterday. One is an indicator for the other. They're basically peers. It's the same exact move. Chipotle ripped higher at the open. Domino's ripped higher at the open. Holy. Wow. I can't believe Domino's is $500. It was expensive on a valuation basis. It was, or from a PE basis, it was expensive at like $300. Yeah, I know earnings are going up, but still. What a move. What a move.
ALSK, Alpha Lima Sandy Kilo, getting a pop here on volume. Alaska Communications, big spike in volume for ALSK.
Yeah, WISA, Roy Ribbon, we'll have the CEO on Power Hour today at 12:15. Nope. Yes, 12:15. All right. What else we got? We got Domino's, QDEL, ALEC, Paycor. Hey, if you guys missed my interview with Paycor yesterday on the At the Close show, I talked with the CEO at like 3:05 yesterday, Raul Villar Jr. Check out the At the Close, the pre-market prep At the Close from yesterday. You'll see that. A nice day today. Human capital management software. Oh, look at Neuro. BTFD? No? See, look at this thing. It's like, and this is exactly why I prefer to look at percent change from the open rather than percent change from the previous close, right? Because Neuro from the close is up 30%. You think, oh, great day for Neuro. Not so fast, my friend. From the open, it's down 30%, right? That to me tells more of the story. Most people are not trading here in the pre-market. Most people are trading after 9:30. That tells the story of the day, not this 30% gain from yesterday. I don't know. I'm sure you can find technicals, but this is not my bag. I am looking for more setups, though. If anyone has anything cool they want us to look at, drop them in chat. I'm interested. I've decided to be a little. I allocated a portion of my my Fidelity account to do a little bit more active trading. So I'm gonna start doing that because I'm not the most active trader. So I allocated like 20% of the account to do like more active stuff. So, okay, now they're coming in. AEHR, that was one from the other day, right? That was a bit high flyer. Yeah. Look at this thing. See, I would never, but like I would never buy this now, and that's probably why I'll never have a major runner because it could go to 12, and I wouldn't have bought it at 7. What was the news again on AEHR? I don't remember. Was there even news? Is it just a low floater? What's the float here? 20 million shares, low float. Okay. What's the setup in Fred? Nike.
CrowdStrike, CRWD, share spiking to new highs of 4%. Trader circulating word that the stock was added to the Investors Business Daily leaderboard.
Oh my gosh, that's never been a.
That's Charlie Romeo Whiskey Delta.
Historically, or at least as long as I've been at Benzinga, which is almost 6 years now, that has never been a reason for a stock to spike. But we are in a new kind of market, and that could be a reason. That kind of a thing being added to the IBD list could be a reason for a stock to spike. It never was before, but it could be now. Or you just say, I don't care why. I just care that it's happening.
Good morning, Mr. Spencer.
What's up, baby? Speaking of CrowdStrike, I saw a note. I think it was a note this morning. Was it Keefe that they were? I think they were raising their price targets across the board on cybersecurity due to increased demand. Speaking of, you know what? I didn't cover ratings on the show this morning. and I wanted to because Airbnb got itself a nice little upgrade this morning. Airbnb upgraded BTIG to buy. I am long Airbnb. Pull up the chart. It's what I wanted to buy for a long time and didn't. So I bought it like 2 weeks ago. So I'm probably a little. I'm a little bit. I'm down a little bit in the position, but not a ton. Yeah. So they got an upgrade this morning. So they opened higher and gave back all those gains promptly. Interesting, right? Because we're having a day. Like tech is strong today, right? Look at the Qs. Tech is strong.
What did Airbnb get up to right after its direct listing?
What did direct listing? I don't even remember.
I think so, 200 something.
The all-time high, is that what you're asking?
Yeah, it was
219.
Okay.
Yeah. Unless it was higher in the overnight session.
I mean, I think it's at a good level right now. I mean, I think the company has some problems as far as people have been upset about like hidden fees and things like that.
I mean, I didn't have the greatest Airbnb experience the other month, but I like the idea of the company.
There was also whoa, does my shirt look as like wonky to you as it does to me right now?
Yeah, just because you're wearing stripes.
It's crazy. Was that you and I, Spencer, that we were talking about? I think it was like a Bloomberg article about Airbnb with some of the kind of
that was me.
Shady stuff.
Yeah, if you guys didn't read that, it was from a couple months ago now. Bloomberg had a really, I think it was the cover story on Business Week, all about the Airbnb like damage control team and what happens when like horrible things happen to Airbnb hosts and guests, and all the money that Airbnb spends on damage control.
Yeah, like millions of dollars, getting victims to sign NDAs, trying to avoid court litigation. But hey, stock looks like it's at a good level right now.
Hey, right? Isn't that all that matters at the end of the day? Is my portfolio?
Yeah, exactly.
All that matters.
Exactly.
My portfolio. Good day for tech here so far. Apple nicely in the green.
Check on Baba real quick.
Sure. Let's look at our old friend Alibaba. Whoops. BABA. Within the context of the FXI.
Yeah, it's like the same thing we were just talking about with Airbnb. It's like China this, China that. Hey, I'm just concerned about my portfolio.
Voltage Charging and Streetlight announced strategic partnership. That's VLTA and SNPR.
Thanks, Charles. VLTA.
Where's Charles from, Spencer?
Where does he sound like he's from?
Boston.
No, Brooklyn.
Okay. Did you ever listen to
VLTA?
Car Talk?
No. I'm a little bit too. I think I'm too young for Car Talk. Maybe I'm not. I never listened to Car Talk.
No, I think you are. But my mom really liked it.
How do you know about Car Talk?
Well, my mom's from Massachusetts, and I used to listen to a lot of just NPR in general.
Okay.
In my college days, and they would play like a best of Car Talk.
Yeah.
And I always thought it was funny. Well, I realized after a while, because they'd like do this every weekend where they'd be playing an old episode of Car Talk. And I was like, why is someone always calling in about like a 1995 Subaru? Like there's never anything past 2000. And then eventually like it dawned on me that they were playing replays. With the Tip and Tat brothers or Tick and Tack.
Couchbase, BASE.
That's what Charles kind of reminds me of, but the Car Talk guys are both very Boston.
I was wondering how you're going to bring it back to Charles.
$24, indicating $32. That's Bravo Alpha Sandy Echo.
That's today's IPO.
And then it became kind of
ZENV IPO priced at $13, indicating $11. That's Zulu Echo November Victor. ABSI IPO priced at $16, indicating $25 now. That's Alpha Bravo Zulu, Alpha Bravo Sandy India. ZVIA IPO priced at $14, indicating $12 to $14. That's Zulu Victor India Alpha. Ryan Specialty Group, RYAN, priced at 2350, indicating 2450 to 2550. That's Romeo Yankee Alpha November. INST and Structure Holdings priced at $20, indicating $21 to $23.
How many IPOs are there today? Damn. I was wondering how you're going to bring all that back to Charles.
Well, yeah, I was gonna say too. Just the last note on it is it kind of took a dark turn because at the time I didn't know. I was listening to reruns, and then it ended up that one of them had actually like passed away, and I was listening to like I was like, oh, that's kind of sad. I always thought I was listening to them live, but one had been dead for like 10 years.
That's sad.
Yeah.
All right.
But I'm seeing some love for your car talk in the chat. The click
extends digital design leadership with revolutionary ML-based Cerebrus, delivering best-in-class productivity and quality of results. Press release, Charlie Delta, November. Sandy.
It's smash the like for Car Talk, guys. That show hasn't been on the air like 20 years, right?
I don't think so. What it wasn't there, isn't there? I saw like a study one time that like more and more IPOs was like a bad sign for the market. Like I think it was either like before the 2000 bubble or before the 08 bubble, like all these companies went and rushed to be public.
Yeah.
And that kind of front ran.
Well, it comes down to like where you are in the business cycle, right? Typically speaking, you see more IPOs at the later stage, or not the business cycle, the investing cycle. Typically, you see more IPOs at the late stage of the cycle. So it's a causation or a correlation causation thing. Does the fact that there are a lot of IPOs mean that a correction a downturn is coming, or is it merely a case of companies?
TYME, Time Inc., Tango Yankee Michael Echo, files for U.S. patent compositions and methods for modulating cancer. That's Tango Yankee Michael Echo.
So is it a case of all these companies going public? Is that the indicator for the an upcoming correction, or is it a case of these companies merely? Is it a case of one causing the other, or just a natural part of the cycle? I guess is sort of the question there. But typically speaking, you see more IPOs at the later stages of any given bull cycle. I'm looking at Renaissance Capital right now because they do a great job. They've got some good IPO stats. According to Renaissance Capital, there have been 242 IPOs priced this year. You can't compare year-over-year numbers, so I'm not going to. I don't know how this compares to 2 years ago. I'm sure it's higher because you got the backlog of last year. So I'm sure it's going to be a record year for IPOs, but you kind of have to fold these 2 years in together. So,
and Renaissance is kind of the premier quant trading firm, correct?
No. Renaissance Capital, they have the IPO ETF. I mean, they do other things as well, but
I thought Renaissance is the one with like the crazy story behind the guy.
No. That's a different Renaissance.
Oh,
yeah.
You can see my confusion there.
I could see your confusion. Yes, that's Renaissance Technologies. That's a different one. Question from Lazyman VT: is the scanner live or delayed? The scanner is live. The stream is delayed by like 10 seconds. Like I just said this 10 seconds ago. So, in that sense, there is a delay, but the scanner in Benzinga Pro is a live scanner.
Oh, James Santangelo?
Santangelo?
Santangelo. That's pretty good. James, I love James is always like correcting me in the chat. He's like, oh, you want to know? He's like, you want to know what Palantir does? Read my article, like all this stuff. So James, shout out James, coming with the info. I love it. Thank you. Yeah. Sorry for butchering your name.
That's Renaissance Technologies, not Renaissance Capital. Those are two separate. All these companies have shared names. It's annoying. Anyway. Someone mentioned Asana. Yeah, I mean, it's a good day for SaaS. I you know what? I've been having Salesforce on my mind. I saw they closed the Slack acquisition. This is like a value tech play. This has been a huge laggard, right? The past year or so. If I go to a weekly chart, right? I mean, this was like one of the street's favorite stocks for like 5-7 years or whatever, maybe longer, 10 years. Huge laggard of the last year. Basically, since they announced, I think they announced the
VRAY, VRAY Technologies files U.S. patent, radiation therapy systems and methods, Victor Romeo Alpha Yankee.
I think they announced the Slack deal. I want to say it was October of last year, and they just now closed it. So maybe that was it. In any case, Salesforce has not been the leader, but these guys like print money, right? And
Yeah,
they're basically the premier SaaS play. So it's on my list. It's on my watch list for sure. So something I keep it. But anyway, going back to the today though, Asana. You can look at not Legal Zoom.
Wait, Spencer, real quick for not for me, but maybe for someone in our audience who doesn't know. When you say SaaS,
yes,
what are you referring to?
SaaS, SaaS, software as a service.
Okay.
A business model predicated on recurring revenue. For a B2B business, someone that sells software to other businesses and gets recurring revenue, essentially subscription revenue.
So maybe like a Shopify.
Yeah, in a sense, yes. Shopify maybe has replaced. I mean, Shopify is more not like Shopify is a little bit.
Oh, see, this is what I'm talking about. James in the chat gave us all SaaS plays.
Shopify is a little bit more B2C. They do B2B stuff, obviously, but Slack was a great example, and Salesforce bought them, right? Asana, James put a few tickers in there as well, right? Splunk, CrowdStrike, Snowflake is a good one. Palantir is a good one. Thanks, James. Oracle, right? Is GME halted? Wait, hold on a second. What? Is GME halted? We can go to the halt and Benzinga Pro and find out. GME?
And guys, if you're getting some value out of this stream, do us a favor, smash that like, turn that little blue thumb that you see on your YouTube from gray to blue, subscribe to the channel, turn notifications on. That way you will not miss out on any updates on the market, as well as great exclusive interviews. Later today on Power Hour, we are having ticker WISA.
Johnson shares are popping here, 170.34 J&J.
Whoa, no. GameStop is not halted. I don't know who said that.
Oh, Jason's throwing out 5.9 as another. Didn't Asana or someone just acquired 5.9, correct?
EMA earlier said that the
Yes.
benefits of the COVID-19 vaccine Janssen continue to outweigh the risks of the vaccine.
Yeah, I see what you're seeing, Jordan. It's not moving, but it's not halted. No.
UPS, Uniform Papa Sandy, Business Insider, reporting that UPS is testing same-day delivery.
Whoa.
That's Uniform Papa Sandy.
All right. That is a notable headline. UPS testing same-day delivery. There you go, folks. UPS just went to the high of new highs of the day. Now up. I mean, still not really up for the day. It's up, 0.25% or whatever. But new highs.
I don't even know logistically like how that would work.
I don't know.
I guess Amazon does it.
Yeah, I mean, yeah, not for everyone.
Yeah,
and not for everything either. So,
do you think in our lifetime we're going to be getting like packages delivered to us via drones or
reporting that the U.S. is expected to announce sanctions as soon as Thursday on several Cuban officials over crackdown on protests, according to Reuters. That's Reuters.
Not a market moving headline there. Do I think we'll ever get packages delivered by drones? Is that what you said?
Yeah, like in our lifetime.
Yeah, in our lifetime. Oh, for sure, in our lifetime. Yeah.
Well, what's going to happen to like all the delivery drivers then?
When Microsoft Excel was invented, they said, "What's going to happen to all the accountants?" You know what happened to all the accountants?
They became Excel
No,
workers.
Demand increased.
Really?
Demand increased because it became way more efficient and you could do more work.
Yeah, I think there are certain things that become more that like creates jobs, but I think some of the technology things could, like when Jason and I were at the Rocket Mortgage Classic, he pointed out that they have all these automated camera towers.
Yeah.
And like 10 years ago, those towers used to be manned by cameramen. And so there are like certain things where that'll create new jobs, the technology advancements. And I think certain things will, like, I mean, for Teamsters, truckers in general, that's like one of the biggest, historically, one of the most powerful like unions in the country. And now, if in 20 years we have all automated 18-wheelers and they're making shipments alone, I don't know like what's going to happen to truck drivers.
Look, as Voodoo put it, demand increases demand, right?
Oxy and MOXC getting a pop here on volume. Michael Oscar X-Ray Charlie.
Michael Oscar X-Ray Charlie. Whoa, look at that. New highs of the day for MOXC. See, Charlie's like having it's having a scanner in your ear. It's amazing. Anyway, this is all on Benzinga Pro. Pro.benzinga.com. Free 2-week trial. Check it out. You have a question, you want to know more, just shoot us an email.
No credit card needed. You have literally no reason not to go sign up for the 2-week free trial at pro.benzinga.com. You don't even need to put a credit card in. You will see how useful and helpful all these different tools are. And honestly, Spencer, the best part about Benzinga Pro is you get access to our full team of staff. So you want to call, you get Mallard on the phone. You get a guy that literally knows the product better than anyone else, walking you through how to use it, how to use Benzinga Pro to help you make money in the markets. No reason not to sign up. Pro.benzinga.com or shoot an email to onboarding@benzinga.com. Let us know how you like it.
Yeah, and it's not even like guys like Mallard too. It's like if you have a question about a stock, you can ask our news desk. That's literally their job. It's not just posting headlines. It's talking to our users. That's the job. So you have a question. I don't understand the stock. Explain this headline to me. Boom, they will do it. That's what they do all day. So pro.benzinga.com. Questions, email that the email on the screen, onboarding@benzinga.com. Free 2-week trial. Check it out. I'll put it up as a scrolling banner so you can all see. There we go. Okay. Let me catch up on chat. Amazon, we use crowdsourcing.
Spencer, I need you to find, I want to find the next big mover before it moves.
Okay, let me just take out my crystal ball.
Just give me Spencer, it's not hard. Just give me a stock that's going to 10x in like 3 weeks.
Okay, you know what I would do? So today, Direction launched a brand new ETF, and it's an ETF that holds only low price stocks, and it's a little bit weird because AMC's in there as well. But hold on one second. I'm getting through this. Okay, so they launched a brand new ETF today. It's a low price ETF. Let's find the holdings of this ETF right now and see if that could give us any ideas. All right. So 1 second. I'm trying to find. I don't remember what it's called. What is this new ETF?
That's funny. Solar Up said he saw someone else's shirt at the coffee shop said SOFI on it. And he asked if she works for SOFI, and she just said she didn't know what it was.
What?
That's good. Yeah, wait. James wants a mover too.
All right, hold on a second. I have this this note here. I have this note. LOPX is the ticker. Okay, here we go. All right, so holdings in the low priced ETF, AMC I mentioned. Okay, I'm gonna bring it up I'll bring up charts. Just trying to give you ideas here, okay? And the reason I want to hear first is because you asked for 1,000% gainer. Well, only a low price stock can move 1,000%, right? So AGEN, okay, is the second largest holding in this ETF. AGEN. I don't know what this company does. There it is. TELL, oil and gas company. Okay, TELL.
Michael, Benzinga Pro is not only NASDAQ. We get data from other exchanges as well.
Yes. MGI, MoneyGram. I've never understood this company. It's at $11. All right. AR, Antero Resources Corp. That's oil and gas. trying to give you some low-priced ideas. Now they have an ETF to factor. Oh, it's 11 o'clock. We got to go. CDEV, okay, ENLC. These are all oil and gas. Oh, BKD, Brookdale Senior Living. I'm just trying to drop some ideas. BKD, $7. Oh, Clear Channel? That's public? Okay. CCO? All right. Anyway, it's 11 o'clock. Let me turn the squawk off here. SPAC's attack is starting right now. They're going to have the CEO of IonQ. It's the company merging with DMYI. That's the SPAC, DMYI. Let's pull it up on the screen. He'll be on this show at 11:15. That's Peter Chapman. So tune in for that. This stream will redirect straight to SPAC Stack. We're going to hop off here. Please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. For Aaron Bree, I'm Spencer Israel. We'll see you a little bit later. Everyone have a good rest of your day. SPAC Stack is up right now.